Hey everybody, Mike Turnquist here, Seventh Level Real Estate. Pretty excited to be talking about what we got going on today, smart shopping in today's market. Um, Again, super excited to be presenting this material to you. Most of you know somebody or everybody wants to be part of real estate. They want to talk about it. Everybody's talking about it at parties. So that's why you came to the right place. Definitely came to the right place. What you're going to learn today is definitely going to be able to set yourself in that position to win in today's real estate game if you are interested in buying a home. So I want everybody to kind of pay attention. What I'm about to teach you guys is hot and it's fresh and it's really good information for you guys. It comes from 17 years in the real estate business. We've sold over 236 homes, and so it's not our first lap around the track. A lot of the stories that we could tell, the writers of Seinfeld couldn't even make up. So anyway, here we go. At the end of the webinar, I'm going to be making a couple offers. We have some great material that we want to be able to share with you and give you guys some an opportunity for a private, personalized plan for home ownership and whatnot. So, okay, let's get ready to go. Okay, awesome. All right, smart home shopping in today's market. Here we go. Real estate is the safest investment in the world. If I had a way of buying a couple 100,000 single family homes, I would load up on them. That's a famous quote by Warren Buffett, just telling you how safe and how awesome real estate can be. Okay, what you guys are going to learn today. All right, 5 reasons to buy a home. Tax benefits of home ownership. Uncle Sam definitely rewards you for owning a home. We're going to talk about inventory and what's going on in the market and how many homes are available and supply and demand, buyers markets, sellers markets, and that's all tied to inventory levels. We are going to talk a little bit about interest rates and what those interest rates mean to you, and a little bit of appreciation and market conditions. And then we're going to also talk about how to combat the speed of the market, because right now, today, in San Luis Obispo County, the market is hot and it's fast-paced. So we're going to give you some strategies there. And then the problem is, for many home buyers, is getting into multiple offer situations. So we're going to talk a little bit about how to win in a multiple offer situation. Okay, 5 financial reasons to buy. So pretty basic. Housing is one of the most leveraged investments available. And if you take a look at other investments, let's say stocks, for example, can you get a loan to purchase stocks? Can you buy $100 worth of stock for 20% down? No. So housing is an investment and it can be leveraged. Okay. Number 2, you're going to pay for housing whether you rent or own. Okay. If you are renting, you are paying for housing, but you're paying your landlord's mortgage. Or if they don't have a loan on the property, you're putting it right in their pocket. So either way, you got to have somewhere to live. So you might as well own what you live. Owning is usually a form of forced savings. By that I mean, as you go and pay off your loan over the course of the time that you own it, you are building up equity and saving that money in a sense. Okay, tax benefits. Okay, Uncle Sam rewards you for owning the home. That is definitely for sure. We're going to talk a little bit more about that. And the last reason, owning is a hedge against inflation. Okay, so once you've purchased the home, no matter what the market does as it goes up, if your interest rate is fixed, it cannot be raised. If you're renting or whatnot, the landlord at the end of your lease could always vote to increase your rent. Okay, some tax benefits of home ownership here. Here's the biggest one. You can write off the mortgage interest. And the way most mortgages are set up, the beginning part of your loan, the first few years of the 30-year term, is mostly all interest. Okay, the way they are amortized. So that mortgage interest is deductible on your tax return. Okay, there is no income tax on the sales, depending on the amount of profit. So the capital gains aren't counted against you up to a certain limit. Improvements are health are partially deductible. And anytime you pull money out of your home for a home equity loan, you can deduct that interest. Well, this is a big one for a lot of people who are self-employed. If you work out of your home, you can have a home office deduction, deduct land lease payments in certain situations, and moving costs are deductible over 50 miles. So if you are transferring into a new area, you can deduct those costs. And you can also write off your property taxes as well. So I want to disclose that I am not a tax professional, so I'm not necessarily giving you tax advice, just kind of overlaying the benefits of home ownership according to the tax man there. Okay, inventory levels. Let's talk about inventory levels. So what is inventory? Okay, inventory is the amount of homes that would sell in a 6-month period. So if there are 10 on the market, 10 have sold in the last 6 months, you take how many months did it take for those 10 to sell? Okay. Now, seller's market tends to be anything less than 6 months. Prices go up. Buyer's market, there is more inventory on the market. So anything over 6 months, prices go down. So take a look at this. So in a seller's market, home prices will appreciate. It's basically supply and demand. Anywhere between 6 and 7 months is what we consider a neutral market. And home prices will only appreciate during inflationary times. Okay, greater than 7 months, there's a lot for buyers to pick from, and home prices will tend to depreciate. And that's what we saw back in 2006, 2007. Okay, so let's take a look at inventory levels under 400,000. You can see it, and this is over the last year, they've hovered around that 2 mark, and they've maxed out sometime around in February at 3, but currently they are sitting at 1.9 months in SLO County. So there's just not a lot of homes for buyers to purchase. There's a lot of demand and not a lot of homes on the market right now. So you have just a hair under 2 months of inventory in the market under 400,000. Okay, so that makes it very competitive. It makes the market, the speed of the market very fast. Days on market stay low, and this is what is boosting pricing at this point. Okay, a little different market, 400 to 600,000. This is kind of considered the mid-range of the market. Not necessarily maybe first-time home buyers, but move-up buyers or whatnot. And these are homes that have about 2 months worth of inventory. Okay, so you can see a very similar graph, but homes that are priced in this price range are still moving as well. And 600 to a million, you can see a slightly different story. Back in February, it peaked at six months of inventory, so it was pretty even. But right now, the market has a little bit more to offer at 4.5 months of inventory. So a little more to pick from in this upper end range, and over a million, was what we kind of consider luxury market there. So still well under that 6 month mark. Okay, so here's over a million. This is our luxury market, and you can see there's a little bit more going on here. Now, the reason that is there are less sales in this price range, but there's also more inventory as well. So it's about 6.3 months of inventory. So it's pretty even at that point. Okay, everybody understand inventory there? Okay, so interest rates. We all know interest rates are at historic lows. I mean, low 3s, depending on what loan program you can get. So we're going to talk a little bit about where the rates are now, where they're headed, and how that affects your purchasing power, and what it could mean if you wait versus trying to purchase now versus waiting. What that could cost you if the interest rates go up. So check this out. Back in the 70s, the average interest rate was 8.86%. That was considered a pretty good rate. We had a really high interest rate in the early 80s. It went up to 12.7 was an average, and there were interest rates up in the 16, 18% at some point. But over the decade, it averaged at 12%. Now, if you walked into a loan office now and they were going to offer you 12% interest rate, you would just laugh at them and immediately walk out. But that was considered normal. In the 90s, it went to 8, and then in the 2000s, we had 6%. So when we were in the boom years, it was still considerably higher than where it is now. So currently, by this graph done by Freddie Mac, looks like we're right about 3.5%. But if you can see that Freddie Mac predicts that in 2017 they will go up. But this graph is a little bit scary if you ask me, because it shows a pretty steep grade there, but it only goes up to 3.9. It's a very small number as far as this graph goes. So where are they headed? So we can kind of see that over 2017, they're going to maybe we pulled the numbers from Fannie Mae, Freddie Mac, the Mortgage Bankers Association, and the National Association of Realtors, and we took their projections of where these rates will fall in the next 4 quarters. And you will see the average on the right-hand side of the graph, okay? So 3.6 in the 4th quarter, so they're going to tick up a little bit in the next quarter, and then by mid-year, 3.8, and in the 3rd quarter of 2017, they're going to approach 4. So still incredible interest rates going through the 4th quarter of next year. So that's the projection there, okay? So what does that mean for your purchasing power? Okay, so at $400,000, your interest rate of 3.75%, give or take, would equate to a monthly mortgage payment of $1,852. And as you go up a little bit more, your purchasing power decreases while you keep that mortgage payment a little bit. So if you increase the rate to 4.75%, which we got a little ways to go, your payment's a little bit higher, but now you can afford 10% less home, okay? So 1% in interest rate equals about a 10% dip in your purchasing power. So what does it mean if you wait? Here's the cost of a mortgage today at $400,000 at 3.8%, same number, $1,863. And then if you get a 4.8%, say, and this number is going to be a little bit higher than the 1st quarter of 2017, that number goes up $348 a month. And that is a car payment for some. That is 2.5 visits to Starbucks. So you can see it could end up costing you more for the same home. Okay, so that calculates interest rate increase and standard appreciation that we should probably see. With lower mortgage rates, we've ended up in the sweet spot that if you have good credit and enough money for a down payment, it remains very affordable to buy a home. Now, that's a quote by Jonathan Smoke. He's the chief economist at Realtor.com. So pretty smart guy. He watches a lot of these numbers, and he's agreeing with us that the low mortgage rates are fantastic. So let's take a look at affordability. A lot of people feel that we're bumping up into a situation where homes are reaching a price where they're just not affordable anymore. But if you take a look at the graph as a whole from 1990, we're still well above that average affordability. Now, in 2011, 2012, when we hit the bottom of the pricing, yes, homes were a lot more affordable then, but that was based upon getting rid of a lot of that distressed property that was coming online between 07 to 2011 there. So if we remove the boom and bust years out of that, homes are still very affordable on this index here. And you can kind of see your monthly mortgage payment. And this one's based upon the average median home price in the U.S. So I would love to have an $858 mortgage on the average priced home here, but this is a national number here. So you can see that in 2006, at the peak of the market, it was easily a lot higher than it is today. Okay, so how much home can you afford? This is definitely a situation where you want to get with a good mortgage professional. We can refer for you. We only work with the best here, and you definitely don't want a bad one. But typically, lenders will go as high as 30 to 40% of your gross income, and no more than your 40% of your gross income can be tied into debt. Okay, so that's when you add in your car payments, your utilities and other things like that. Okay, and PMI, private mortgage insurance, is often required if there is less than 20% down. So depending, again, that's very program specific. So some programs like the USDA, the PMI is paid up front instead of on a monthly basis. So definitely want to speak with a good loan officer there and figure out how much you really can afford. Okay, so here's a question everybody wants to know. Hey, what's the appreciation going to be like? What is the market going to do? And there are a lot of naysayers out there that are predicting a shift in the market, a crash, all sorts of things that we've heard these people talk about. Okay, so and from this graph, you can kind of see why they may think that, right? So you can see year 2000, everything kind of goes up, and then around the year 2006 is when we peaked out. 2007 started to come crashing down, and in 2012 we started to recover. And you can see those numbers are approaching equal lines as far as median sale prices. Okay, but that doesn't necessarily tell the whole story. So we had a boom and a crash. Okay, these were not average appreciation years. Okay, the average appreciation should be about 3.6% per year, and that's what the trend line is if you take a bigger portion of time. But if we were to overlay typical appreciation and say that the market didn't boom and bust like it did in 2006, you can see that the prices have not yet reached where they should be. Okay, so if we didn't get into that mess that we had, prices would still be going up and they have a little bit more room to grow. So this shows that we are not necessarily where we need to be pricing wise. Okay, so the mean percentage appreciation, and this is numbers from the Home Price Expectation Survey done recently, that 2016 we're going to see about a 4% increase in appreciation, and in 2017 3.4%. So we're going to get right around that average, and then it's going to start to dip 2018, 2019, 2020. But what you're not going to see here, ladies and gentlemen, is a red bar. Okay, nobody is predicting that appreciation will go negative. So it's going to slow, yes, because more properties are going to come on the market. Days on the market are going to extend. There's going to be more selection. There's going to be more inventory, but it doesn't necessarily mean that the prices are going to drop. So, and this is on average each year. Okay, so, and if you take a look in that same survey, by 2020, the positive people are thinking we're going to have a 26% increase in pricing from where we are now. And even the negative Nellies, the bears in the marketplace, are still predicting an 11.1% increase in pricing by the year 2020. So this is all very positive. The market is shifting, but it's becoming more normal. Okay? All right, let's talk about the speed of the market here. Okay, a couple of different ways that you can prepare for that. You're going to want to set proper goals. Okay, it is a good idea to set proper and realistic goals so that you know where you're going. When this market is going by at lightning speed, you don't want to wing it. You want to know where you're going and what you want. Okay, know your limits. It's also very easy to become very house poor and get wrapped up in the moment because you don't have a lot of time to think about it. And if you didn't set your proper goals, you may not know your limits and you may be able to get stretched beyond your means. So It's also very important to set proper expectations on what this market will bear. Now, a lot of times we get people coming in, we take a look at some homes and they want to write some offers and they want the 2012 pricing still. So they're going to lowball the seller and it doesn't work out. Okay. The market isn't allowing buyers to come in and lowball. We are not in that type of market anymore. So it is possible to have improper expectations of what the market is going to bear. So you really want to get with someone who can show you exactly what's going on here. Okay. Be available. Okay. If you're really serious about buying a home, it's very important to get in and see them and make a decision quickly. Okay. So you don't have time to sit around for 2 or 3 weeks while you think about whether or not you want to purchase the home. Unfortunately, it is what it is, and you got to be quick about it because there's 2 other people that may be lining up. And you want to hire a great agent. A good agent just sometimes doesn't cut it anymore. Okay, great agents are in tune with the market. They know about homes that maybe aren't on the market at this time. And they also have and keep good relationships with the other players in the market, the other realtors, the appraisers, and the all the vendors, escrow, and the whole bit. So if you have someone that's been blacklisted by the listing agent, you may not get great results. And great agents keep those relationships really well, and they stay on top of things. They want to make sure that your agent is not part-time as well. Okay. So that is very important. You don't want to miss out on stuff. We offer a buyer direct access program. It is fantastic. It really keeps up with the days on the market. And what most agents are going to do is they're going to just set you up in a search criteria in the MLS, and it's going to automatically email you, and they're going to sit around and wait for you to call them. Definitely not the fastest way to go about it. And by the time you check your email, maybe that house is gone. So you really want an agent who really has their thumb on the pulse of the market here. Okay. How to win in the multiple offer situation. This is very, very common where property on the market, especially in that low end, under 400,000, where the days on market are 2 weeks, a week. Sometimes things sell in a couple of days. It is very common to have more than one offer on the property at a time. Okay, so get your ducks in a row. Get pre-approved, not necessarily pre-qualified. Okay, you want your lender to have already taken a full application, have seen your bank statements, have seen your pay stubs, tax returns, all that. And the only thing that they are needing on that file is an address and an appraisal. Okay, there's a big difference between being pre-approved and pre-qualified. I can get anybody pre-qualified in 3 minutes over the phone, and that lender has not verified anything. It's just, he said, she said over the phone. And I can get a pre-qual letter very simple to accompany an offer, but it just doesn't have quite the bite in a multiple offer situation. Okay, have fewer contingencies. If you have homes to sell before you purchase, so to speak, or you have have to sell a car or certain things that are tagged on as a contingency to your offer, that's going to not make you look as well. Okay, a seller has 2 offers on the table. One has to sell a house before they buy, one doesn't. It's pretty simple which one the seller is going to take. And you want to work with the sellers. I like to call this win-win negotiating. Okay, so there may be things in line that are important to the sellers that maybe not necessarily important to you. Okay, so a lot of times maybe time frame or price are very important, and you really want to find out what's important to the seller and see if you can get that for them in exchange for things that are more important to you, or just the fact that they'll take your offer over another one. A larger deposit also makes you look better. Now, contractually, the deposits aren't worth too much because within your contingency period, you could just change your mind no matter what. Okay. After all these years, have yet to lose anybody's deposit, and they're protected with the contracts. But, it just looks better when you have a larger deposit. You look more financially stable, and your ability to purchase the home, regardless of in the real world, whether it's important to the seller or not. Okay, so larger deposits look better than smaller deposits. Larger down payments also look better than smaller down payments. Now, this is probably one that's a little bit more difficult to, you can't all of a sudden, well, I'm now going to put an extra 20% down. Maybe you're not in that situation, but take a look at it from the standpoint, yes, a $400,000 purchase to the seller at close of escrow, it doesn't matter where it comes from, whether it comes from your bank account or a loan or whatever, 400,000 still spends the same. But when selecting two different offers, a larger down payment loan is going to look easier to process. And mortgages aren't necessarily super easy to process right now. So the seller may think that even though you have a zero down loan, maybe that's going to be harder to put through. Who knows? But large down payments are considered better. You want to make a strong offer. Okay, we talked about this a little bit earlier. Strong offers, it's depending on the segment of the market, depending on the property itself, how long it's been on the market, and each house has its own story. The sellers have their own motivations and why they're selling and what's going on. But in this market, you're going to want to make a strong offer. Most homes on average sell between 98 and 101% of their list price. So if they're priced properly, they're probably going to get close to their listing price. So when you're competing with another offer, you really want to make a strong offer. And you want to stand out amongst the crowd. Okay, we've had people who have fallen in love with houses that are absolutely perfect. Other offers are already on the table, and sometimes writing a cover letter with a picture and about how the family loves the home and a little bit about does do a good job standing out from the crowd. But there have been times where we've made an actual personal video of the client and presented that in person with the offer, so that that seller can have a little bit of emotional attachment to you as a buyer, and they're not going to forget you. And if you can pull a little bit on their heartstrings, it goes a long way, believe it or not. And here it is again, work with a good, great agent. A great agent is going to set your offer apart from the other ones, sometimes by the relationship with the listing agent. If that listing agent, you don't get along with the listing agent, and you've had some transactions go really bad or they're difficult to work with in the past, that listing agent may press or push another offer other than yours just because of the agent that you have. So it really is important to work with a great agent who has a fantastic reputation in the community. Also, a great agent will try to present your offer in person. Okay, not all the times that this happens, but instead of just pressing a button on an email, technology is great, but that may not set your offer apart and get it presented in the best light. And then that way, the agent is there to answer any questions or any kickbacks that the sellers may have at that point. So it's a good time to be able to negotiate that with them. So why do you need a realtor, and why would you not want to do it on your own? Okay, so a realtor is going to help you determine your buying power, investigate unadvertised listings. Couldn't tell you how many times we've sold homes that aren't on the market yet just because chatting with an agent on a water cooler, or searching for sale by owners, or looking through old listings that were on the market that didn't sell. A lot of that happens all the time, and a great agent is going to be able to show you some unadvertised listings. Realtors are negotiators. I love to negotiate. It's fun. I like to practice win-win negotiating, but negotiating is very important. And if you are emotionally involved in the transaction, it's sometimes very difficult to negotiate on your own. We're going to help you with the due diligence, the inspections, the disclosures, really finding out what's important and what's really going on with the house. We're going to talk a little bit about different financing options and help make sure that along with your loan officer, that's the best fit for you. We're going to walk you through the closing process, which can take from 30 to 60 days or sometimes even more. And there's a lot going on. And here's a big one, contract guidance. These contracts are long and they're wordy, and the first time you read them, it might take you a couple hours to kind of get through it, unless you have someone who, let's say, translates them for you and walks you through your rights and is able to write them up and negotiate them on your behalf. So very, very, very important there. Okay, so here's our first offer. Things to consider when buying a home. It's our new fall 2016 booklet here. And let me put the offer here. Okay, there you guys go. So there is a button on the right that will allow you guys, because you stay till the end, to think things to consider when buying a home, our fall 2016 edition. This is a fantastic book that's going to go into a lot more detail what we talked about here, some market statistics, all sorts of good things. So feel free to click that button and download that booklet for free. Okay. Real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full over time, and managed with reasonable care. It is about the safest investment in the world. That's a quote by President Franklin D. Roosevelt. Very smart guy. Very smart guy. Okay, so what do you do next? Okay, you're thinking about getting in the market. You don't want to make any mistakes. All right, so right now we're going to offer a free home buying consultation. So this is going to be one-on-one. We're going to sit down with you, and it's absolutely no obligation. We're going to show you and set up a personalized plan that's going to meet your real estate goals. Okay, and you will be able to obtain a free copy of our exclusive 58-page A Buyer's Guide to Real Estate. So this buyer's guide takes you from at the very beginning of thinking about buying a home to the whole, guiding you through the whole process, walks you through contracts, inspections, and takes you all the way to the closing day, what to expect when you sign your loan docs, and all the way through paying off your mortgage early if you want to. It is a fantastic 58-page book that we offer to all of our clients, and we're going to give it away to you guys free if you want to schedule a home buying consultation. So I'm going to put the link up there. There you go. So we're going to be setting 6 of those units, 6 consultations up in the next week. So these are going to fill up fast. So be sure to click that button and schedule your appointment. So if you guys have any questions, feel free to email us, call us at 805-591-8147, and we'll be able to answer all your questions. Thank you guys for attending Smart Home Shopping in today's market. Hope you guys got a lot out of it. And again, if you have any questions, our number 805-591-8147.